Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now let me just get this as concise as possible so I don't waste too much of your time. Now, we've got a pretty interesting week coming up. The US numbers, the government shutdown's over, but it's going to take a little bit of time, maybe a week or 2 weeks before we get all the data, get everything sort of back to normal. Now, in amongst that, we do have some key things coming out this week and really sort of focusing on inflation numbers. Okay, we've got Canadian inflation numbers on Monday. Okay, really going to sort of gear up the week. The week starts earlier, this one. Okay, with those numbers. You come into Wednesday, we've got UK inflation numbers. We've got the Fed FOMC. I think the RBA there on Tuesday as well. Got some minutes there as well. But the two inflation numbers are the key aspects that we want to be focusing on, right? You come down into like Thursday. We've still got a whole bunch of numbers out of the US to be compiled and try and work out what's going on there, right? If I look at the major currency pairs, if I just come across to the charts, it's still a bit of a dog's breakfast. And what I mean by that is check out these big ranges, right? Across a lot of the major currency pairs. This is like a market that is sort of chasing its tail. There's no clear, concise direction. The long-term trends, that's what we need to be focusing on, and then see if we can get these hourly sort of trends sort of coming into play, right? And if you look across the majors here, right, looking at the long-term trends, a lot of them are broken down, but they're literally just trading sideways. I mean, Kiwi obviously heading lower; it's in all sorts of trouble. Dollar CAD a little bit higher. The beast is really beating up everyone, right? You start reading some of the articles here, everyone's getting long yen and then it gets flushed out and vice versa. So that's a bit of a tricky one. And you know what? Even dollar Swiss, right? It largely take out the trend lines. These things are drifting sideways. So, and what we need is, especially for the major currency pairs, is the US numbers to come back online, get some uniformity, get some natural flow back in the market. But this is where it comes over to like really focusing on the key data and where the best opportunities are. Now I'm saying like the inflation numbers, right? There's no need to chase these numbers, okay? And if you're looking at the inflation numbers there, and then obviously the UK inflation numbers on Wednesday, right? You come in and have a look at the interest rate tracker. This is where you can work out if there's any sort of likelihood of a movement, or what we need to happen to see a big move happen, right? So now let's just focus on the Bank of Canada first, okay? You're going to need some really crazy weak numbers here, right? They are on hold, right? 99%, okay? So what do we need? Well, you need cataclysmic numbers. I don't think anything can change that. Now, and just above there, you've got the Bank of England, right? 91% focused on, or percentage factored in, I should say, on a 0.25% cut. Okay, so that is largely factored in. What do we need to sort of stop that? Well, crazy, really good numbers. We're not going to get that. We're in a situation where we've got central banks, the numbers are leading into getting us these outcomes, but most of them are sort of well determined, right? So the RBA, 95% on hold. Okay, the RBNZ, 97%, 0.25% cut. Swiss National Bank, no surprise, on hold. So we've got a lot of things going on there. Now, this is the dark horse, right? And I'm sort of saying, just don't hold your breath waiting for the US numbers to come out, right? At the moment, it is coming back to a bit of a line ball decision. I mean, this was about 85%, the Fed were on hold. Now it's a line baller, right? 42%, 0.25% cut, 58% on hold, right? That's going to get very interesting over the coming weeks. It's 17th of November. We've got about three and a half weeks for the Fed meeting. We are going to get the numbers before then, and then we'll know exactly what's going to happen. So trading the majors with the dollar sort of dangling around the place is problematic. So I'm saying focus on the crosses. And you know what? As I was just sort of coming back to there, if I look at the CAD crosses, just focus on the instruments that show a really nice trend. And why? And to do that, right, I would get onto your daily charts, sterling and dollar CAD or Canadian dollar, right? So you got the CAD crosses here. I mean, you can sort of see Aussie CAD. Yeah, it's had a few sort of fluctuations, but largely sort of sideways. Kiwi CAD, a little bit more of a downward progression with Kiwi sort of weakness. CAD yen, right, still sort of edging higher, even with oil heading south, right? That's a bit of a disconnect on that one. Euro sterling, oh sorry, Euro sterling. That's sort of coming up next. Euro CAD still sort of edging higher. Euro sort of holding in there, right? And you got sterling CAD. It has been going up, but if you look at this trend line on the dailies, it's broken down there, right? So that's a clear, you got weaker sterling numbers. Okay, sterling CAD's got to be a good one. And then you got CAD Swiss. Well, there you go as well. It's like that's a clear trend downwards. So trying to look for the trends is they're your friends, right? The old adage, the trend is your friend. Well, that is absolutely 100% true. You come into sterling, right? You've got these long-term trends. Sterling Aussie's broken down. Sterling Kiwi still edging higher. Sterling yen still going up. You look at Euro sterling here. Well, coming up to a resistance trend line. Okay, weaker sterling numbers. You got to think, Euro sterling's got a good chance to get it back up towards 90, the figure there. Overall, it's largely been range bound, like it always is, between 84 and 89. Sterling Swiss breaking down, and then you've got sterling CAD, like we saw on the CAD chart. It's been going up dramatically, but there's a chance here for a flush out to the downside. So as we get closer to the numbers now, I just want to sort of reiterate too, you don't need to chase the release, right? What we're looking for, we've got trending markets here. We just need to identify what the trend is and then sort of look at the number and go, yep, that fits in with the trend for this instrument or that one, right? Isolate the instruments, and that's where the answers are. Now, the Trade Hub, now I haven't talked about this enough, the weekly market insights, okay? If you're looking to get a little bit of a heads up, a little bit of tuition around what's going on, check out the weekly insights. This, like, especially this week with CPI numbers and a lot of central bank minutes and these sorts of things, it's a great thing to be reading, right? And it will tell you, like, a large surprise will be needed for the Bank of Canada to resume cutting, right? So you can get some clear understanding of what is going on here. Tuesday, the RBA minutes, okay? Wednesday, the FOMC minutes. And then coming into the UK CPI numbers, and then there's, the People's Bank of China, Japanese numbers. So this is a really good way to get your head around what's going on, how are the trends going to be potentially impacted by the CPI numbers, what we need, where interest rates are. It sort of brings together a whole bunch of components. Then if you're not sure, still come across to the live signals, and then keep track of the instruments that are trending, right? That's the key part. I'm sort of at this stage still leaving the dollar out of it, even though, euro's bullish, sterling's bearish, and that's a big mismatch. I mean, I know we've got a unique situation in the UK economy, budgets. They came out on Friday, said they were going to drop the taxes, increasing taxes, and a whole bunch of things. The UK is in like rescue mode, and that's dangerous because you see sporadic movement. Dollar CAD bullish, dollar Swiss bearish. So we got things happening, but to me, it's not enough to really, put the house on it. And what I'm looking for is going with the fresh information. Anything to do with CAD, and then you get, well, obviously sterling CAD's going to be a very key one, right? Because sterling CAD is bullish. If we got like as expected numbers out of the UK and weaker CAD numbers, inflation numbers on the today, well, then that's going to fit in quite nicely with sterling CAD, right? That would be your immediate go-to because we got both inflation numbers. It's a shame they're not on the same day, but you know what? It gives us a chance to trade both releases separately. So keeping an eye on sterling. I mean, this is the thing, right? Sterling Swiss bearish, sterling yen bullish, CAD Swiss. Mate, you've got lots of options, but we're just looking for the best one, right? Always remember, you only need one good trade a week to really keep that account sort of ticking away. So keep an eye on your calendar as we go through the week. We get some Japanese numbers, GDP numbers. I wouldn't be sort of getting all excited about that, right? I mean, the yen is back in play. So if you are in the Australasian session, do keep an eye on the Nikkei, right? That could sort of tell you where things are going. But with the US still out of the game, so to speak, it makes things a little bit tricky. Now, coming into sort of Wednesday, Tuesday afternoon, New York, and Tuesday night in London, I will be running a session, especially around utilizing or understanding the interest rate tracker, right? It's a key, it's a key data that you can work out, even if it's a central bank announcement, inflation or employment numbers or whatever it might be. You can see how the market is positioned according to the fundamentals, right? Knowing that is important because if we do get a surprise number, then that's going to be unwound and we know the direction and the level of impact that's going to have, right? I'll be running you through that. Tuesday, as I said, New York, London, Wednesday morning for Sydney. All right. And so just go through the course of the week. As I said, we're going to see developments out of the US. I'm trying to avoid the calamity of trading the majors around that. We've got UK inflation numbers, FOMC minutes, right? The Fed are doing their best. And then you come into Thursday. Well, once again, there's a bunch of US minutes. You got the ECB General Council meeting as well. We will find out, what they're sort of talking about. And then you come into Friday. We've got, you got some yen inflation numbers, UK retail sales, right? Another piece of the puzzle there for the UK and Canadian retail sales figures. So really, we've got sterling and Canada, right? Key numbers, inflation numbers, retail sales numbers. Okay, it would be great to have them both on, say, Tuesday, Wednesday, and really get the ball rolling. But we're just going to wait and be patient and sort of pick off the trades as they come through. All right, so a little bit of an odd week. You look at the sort of news, and it's all very speculative around, the Fed. Are the Fed going to be cutting rates, etc.? That makes it important for the FOMC minutes. I don't think the Fed can do anything until they see the numbers, right? That's probably the truth of it. I actually saw I did have a few crypto customers sort of talking to us. What do I think about Bitcoin and the crypto sort of move? Well, I'd say a correction's long overdue, and this is not like a mental bias. You look at the fundamentals technically here. Well, the fundamentals are Trump basically, and a bit of Elon Musk. But you sort of see here we've got three key trend lines. It's broken the first one. We're at the second one. If it goes down here, I think it's through 85,000, 86,000. It's in trouble, and you're probably going to see a flush out down to 70,000 or whatever it might be. So it's off about 30%. So this year's whole up move is being corrected. What do I think? Well, it's a technical trade. So if it breaks, it's going to keep going. That's what I think. Looks like the market's caught long, and that's where we are. So coming back to the core markets, you're looking at right at the moment, US Treasury yields pretty steady, right? And we're sort of starting the week with a bit of a, I wouldn't say risk on, risk off. It's a little bit more risk on, but we're not seeing that flow into the currencies, and this is quite normal, right? We've come through the weekend. We've got no US numbers. The market is sort of calming down, but we don't have the connection from Friday to Monday. We really need to see the European North American session connect, flush out any sort of nuances that's been floating around with sort of news and those sorts of things, and then we'll see where things line up. So that's why it's interesting, right? Having today with the Canadian inflation numbers, it could give us an early look. Now, I wouldn't be chasing the release, but I would watch it. Right, watch the release, and if you do find instruments that line up with potential moves, like even sterling CAD, right? As I said, sterling CAD's going to be in the firing line because it's been going up for a long time. Now it's starting to correct. So to me, really strong Canadian inflation numbers, which doesn't look like we're going to get it, to be honest, would see a move to the downside, right? Anyway, keep an eye on the signals. Keep an eye on the general news. I'll keep you updated as we go through the course of the week. I think there's going to be better trading conditions coming into the end of the year now that we have got the US government opened up. We see some numbers. I'm still expecting like not a surprise, but really crap US numbers, right? This whole government shutdown will put a shockwave through the US economy, especially consumer sentiment and those things, which we know are already sort of falling off the radar. That could give us some really good moves coming into the end of the year on the majors. Outside of that, we've got lots of different things happening here across the various central banks, right? The interest rate tracker is the key to knowing who's doing what and when they're going to be doing it and by how much, right? That's the key. All right, guys, have a good week. All the best. Cheerio.